Crude Oil Refinery Owners Association of Nigeria said that the price of premium motor spirit, called petrol, can drop to below 400 naira per litre with the current crash in crude oil prices. Koran argued that there is no reason petrol should not be sold at maybe 350 naira, 400 naira thereabout per litre if crude prices eventually fall to about $50 per barrel. However, Koran is equally saying that petrol prices will continue to rise despite the crash in crude prices and the reduction in its landing cost. Talk about the peculiarities of the Nigerian market. So this morning I'm joined by Jide Pratt, COO, Iona, and Country Manager, Trade Grid, to talk about this. Jide, it's nice to have you around.
Thanks for talking to me, Lekan.
Okay, so, Koran is claiming that petrol price could drop. How possible is that when you look at all the issues surrounding the global oil markets and what obtains domestically?
Okay, thank you again. Koran has a perspective, which is what I'd call it. Now, let's start from the global aspect. You notice that the U.S. has been more like, let me say, issuing tariff threats. But the effect of that is that there have been counter tariff threats. So what it does first and foremost globally is that you find out that trade will be inhibited. It will be reduced. So people will take longer times to make purchases. That's number one. The second thing is that, and let's go to the oil sector, you find out that from OPEC Plus, there had been some conversations around increasing production by 138,000 barrels. That has been moved to 411,000 barrels. So automatically what it's done is that we've moved into what you call a glut situation. So clearly prices will continue to go down. So let's come locally first. Okay. Every time there's an effect on crude oil pricing, it affects what we call distillates. So if you went to Platts, for instance, and you went to look at ice gas oil, it's about $565 per ton today. If you want to look at gasoline today, it's somewhere around $640, $650. Now, those indices are affected because every time you want to trade, you're not trading the crude oil, you're trading the distillate. So to work the corresponding distillate and then a landing cost, two things are going to be key. Whatever those ICE quotes are, whatever those Eurobob quotes are, and the exchange rate.
Now, I was going to come to that.
Now, so I said that to say this. If all factors, and back to all conditions being equal, if the price of crude oil goes down to $50 a barrel, and the corresponding exchange rates continue to go down, then you find out that we will be looking at 450, 500 if those two things go down. What is happening today in Nigeria is you find out that crude oil prices are going down. Gasoline quotes and Eurobob quotes are also going down. Sadly, the exchange rate is going up. So while we want to see corresponding further deduction in prices, it's not happening because the exchange rate is on the way up. So I think that's a synopsis of where we are today.
Yes, it's a big one because we can tie it around forex volatility. I mean, the Naira-based crude deal, should I say, has been stopped. We are even having issues around landing and refining costs. So, Nigeria is actually going to pay less. Will the price go down when you look at these four biting factors?
Sadly, the answer is no. Now, look at it this way, and I don't like to be a proponent of doom, but let's face reality. If we can't rein in on the foreign exchange volatility, which is something the Naira for crude solved, taking that off the table now means that there's a lot of pressure now for those who will import, for those who are refining. Everybody that is going to buy crude now is going to go and look for that crude in the US dollars. Now, people are saying, will there be what you would call it, devaluation? It's neither here nor there. It means that two things must clearly happen. Crude oil prices, if they continue to go down, the FX rates must go down. Those two things, if they happen, we will see a reduced price. If they do not happen, or one happens or the other, then the balancing effect, sadly, does not give us that advantage of lower prices at the moment.
All right, so now, Koran is saying that the government needs to continue that Naira-based crude deal. We are hoping that, that would have actually solved the conundrum of full price volatility and all that. But then it has been stopped. And I just asking the question, why was that deal discontinued in the first place?
You see, for me, I can't find any excuse, and that's the word I'm going to use, to why it was stopped. A lot of times we hear things like, look, by the way, we had pledged so much in terms of forward sales for crude. I'm not so sure it was in their place at the point as NNPC to pledge something that goes into federation account. That was number one. So the second thing is this: have we been able to increase crude oil production? Sadly, we haven't. So two things need to happen. We must increase crude oil production. There is a law, domestic crude supply obligation, which speaks to how crude should be given to local refiners. The government has to get back on that train. Go back, because you can't have a desire and then you don't have anything to do to meet that desire. So which is what is happening now. We want lower prices. We don't have a rein on FX. So ideally, that deal should come back on the table. Let us buffer stock. And please rein in on, well, there's a better board in NNPC, I dare say now. So maybe also rein in on this wanton use to want to just pledge forward what is really not yours. I think if those things happen, then we're back on track.
And you think that at this point where we are, we can actually increase production with the challenges with the oil assets?
I think we can. Two things have happened. You find out that there's a lot of local play now. If you look at the Seplat deals, if you look at Renaissance, there's a lot of local play. So it means that IOCs have left, and then local companies have raised capital to buy those things. Okay. So, go ahead.
I was going to pause you there. Yeah. We need to quickly go on a very short break now.
That's fine.
So when we return, you conclude on that particular thought as to if there's a possibility that oil production can be ramped up.
Thank you.
Let's quickly go on a break. We'll be back in a bit. So we're watching Business Edge on News Central Television. We have been looking at the issue of the possibility of the fuel price dropping to about 350 naira, probably 400 naira, 350 naira, according to local refiners. That's their speculation anyway. But then this is hinged on the possibility of oil price dropping to about $50. Now, what are the possibilities of that? We have been asking our guest, who is actually in the studio, Jide Pratt, who is the COO, Iona, and country manager at Crude. So, Jide,
yes, Lekan.
I come back to you now. You were talking about the possibility of Nigeria ramping up oil production. I mean, you know that, we've seen the exit of multinationals, so to speak, and we're seeing the influx of local players now. But then with that, do you think we can still see optimal production?
I think we can. And let's be clear, when it comes to crude oil and production, these are things that you don't just turn on and off a switch. So as assets begin to degrade, what you find out is that more maintenance needs to be done. Is it a wellhead issue? Is it a piping? Is it a flow? Whatever it is. But you find out now, with local content increasing now, two things are going to happen. Community issues will be handled better from what you call a local sense perspective. That's number one. Number two, we're already seeing pledges, we're already seeing plans that look to say that, okay, 150,000 barrels here, additional from the Owando deal, maybe another, I believe, 85,000, if my memory serves me right, from the Renaissance initially. So we're looking at things that probably would work and boost productivity. Again, I say, it's not a switch on and switch off, but there's a part to this. I also believe that local companies that are bought from IOC have more of a reputation to protect. They're local, competence is one, they will still have knowledge sharing advantage. But I also think that they stand to benefit more being local companies by ensuring that this works. So I am optimistic that we will see some increase in production.
There are still questions around the possibility of local players, being saboteurs of the system, so to speak. I mean, we saw, we've heard stories about the possibility of the landing cost decreasing to about 865 naira from 885 naira. But then we still see ex-depot price of petrol rising to about, from 860 to 900 naira. 1,000 naira, depending on the region. And we are saying that local players are not really willing to play ball to see that everything that needs to be done to reduce this price actually comes into effect.
Look, I will struggle with having that belief, and this is why I'd say so. The way you manage your stock and the way you price your stock is an accounting decision. Most local and international companies are driven by a P&L. So one thing to say is this: if you import your petroleum product and you want to use a replacement cost to replace it, then you're going to have to factor in the cost exchange rate as it is. If the exchange rate is higher, how do you reduce and then how do you buy back? That's number one. Number two, some people believe in dynamic pricing, some believe in weighted average cost of capital. So it goes to say that it depends on what model you're using in terms of financing. But I do not believe they'd want to sabotage. What they'll be looking for is how to cover a return on their investment.
Okay, so to wrap things up, Jide, Nigeria is arguably, sitting on Africa's biggest oil reserves. You have highlighted the issues, but then let's be very critical about fast and hard solutions to deal with the perennial problems within the oil sector and see that prices come down. Maybe not 350, 400 thereabouts, but then something that Nigerians can affordably, pay to actually buy.
I think that the first step has been taken. A corporate governance board at the NNPC is the first step. They need to drive towards an IPO so that decisions are no longer taken on political whims, but are taken based on the basis of an industry that is growing. That is number one. The CBN and the federal government of Nigeria need to decide, how do we fight fiscal and monetary policy issues? You can't have policy inconsistencies in this regard. So if the FX is going to be stable, if the FX is going to be something we can plan with, then things like taking the Naira for crude deal off the table is an own goal. I think those are two clear things that we really need to do. Regulation is the third and final part. Regulate the industry for the growth of the Nigerian economy, not for the growth of a party or what you may call it, or an individual. Lekan, if we tick the boxes on those three things, we'll come back here and celebrate.
And I think that's one thing a lot of Nigerians would want, to actually celebrate a price reduction. I mean, that would actually drive down inflation in some quarters to reasonable bits. Thank you so much, Jide Pratt, COO, Iona, and the country manager at Crude, for coming to us.
Thank you, Lekan. Always a pleasure.